Hi, I'm Brien Lundin, and I am the host, producer, CEO, and clean out the waste baskets and et cetera at the New Orleans Investment Conference. And I'm here with Rick Van Nieuwenhuis, who is the CEO of one of the sponsors of our recent New Orleans conference, Contango Ore. The symbol is CTGO on the OTC. And Rick, I believe you're saying that you will be listed very shortly on the NYSE American and uplisting there, probably with the same symbol, but people should check and search by name to make sure they've got the proper symbol once you make that graduation. Rick, very happy to have you here because you are, a lot of people say they're serial entrepreneurs and serial this or that. But importantly, you are not only a serial entrepreneur and financier in the mining space, but serially successful. Every one of your ventures has risen to be really among the leaders in their sector, whether it's gold, silver, gold, copper, gold, cobalt, pretty much everything. But in a history of finding really amazing projects, in some cases strategic projects. And you kind of left your last venture to where you were also very successful because you wanted to get back into junior, I guess, and you can answer this for me, but more into the exploratory development phase, and because you came across a project that was just too good to ignore and got involved. And it's got some unique features to it. So let's bring our listeners and viewers up to speed then on Contango Ore.
Well, Brien, it's a pleasure to see you, and you put on a great conference in a challenging time. So I want to thank you for that. We had a great turnout, so we really appreciate all the efforts of you and your staff.
Thank you.
Yeah, Contango Ore is a little bit of a different beast. Had a lot of fun with Trilogy, and I think we had good success in putting a joint venture together there and getting the road permitted, lots of big milestones achieved. This is, and I kind of felt I kind of done my job there, getting the joint venture formed with South 32. So I think Trilogy's on a good path for success long term. And I still own all my shares, by the way. So, but Contango was an interesting opportunity, high grade deposit, over 1 million ounces, 1.3 million ounces of 4 grams in an open pit mining scenario. And I saw the opportunity to put a really interesting business plan together with Kinross. Kinross owns and operates the Fort Knox mill just out of Fairbanks, Alaska, which is where I live. And it's an underutilized mill. It has a capacity of 18 million tons a year, and they only process about 9 million tons on average. So it's literally half empty. Our ore is high enough grade that we can truck it to the Fort Knox mill. And so we've had some discussions with Fort Knox and with the Kinross folks in Toronto, and we put together a business arrangement whereby we compelled our former joint venture partner, which was Royal Gold, to sell their 40% interest to Kinross, and then we sold half of our interest to Kinross. So Kinross ends up with a 70% majority interest, and as operator and manager. We have a 30% interest. We ended up with a significant amount of cash, about $35 million out of the deal, and we got about 13% of our shares back from Royal Gold in this three-way transaction.
Okay.
And again, the whole driver here is to truck our ore to the Fort Knox mill, and that means a couple of things. One, we don't have to capitalize building a mill ourselves.
Yeah.
Which we did a PEA on that a number of years ago, and it was well over $400 million.
And you would have diluted very significantly to get to that point, so you would have ended up with probably less than you're earning right now.
Exactly. So you gotta pay for everything, and you gotta figure out how to pay for it. And you pay with equity, or if you pay with too much debt, and you get yourself in trouble that way too. So so we don't have to build a mill. That saves us a pile of money. But probably more importantly, from a timing perspective, we don't have to permit a tailings facility. And as everyone knows, in the United States, it's a great place to work, but it does take time to permit things, and especially things like tailings facilities. And I think, in all honesty, it would have taken us 5 years to permit a tailings facility. So that'd be, 5 years of lost revenue, 5 years of a lot of pain and suffering working with the regulators to get something permitted. So this avoids all that because the tailings facility at Fort Knox has been operating for 25 years. They've received many awards for their fish restoration, fish habitat restoration program. Kinross have been good operators in Alaska. They're one of the main employers in Fairbanks area. So, it just made a lot of sense for us to partner with them and get this thing into production on a relatively quick timeline and with very low execution risk, because we're not building much. We're literally not building much at the mine site. We'll have a truck shop, we'll have some admin buildings, we'll bring ATCO trailers in for that, and we'll have a camp for about 125, 130 people down in the town of Toke. So a really slick arrangement all the way around. It's a good deal for Kinross because they keep that mill busier and that helps with their economics at Fort Knox itself. It's a good deal for Royal Gold because they ended up with a royalty, which is what they're in the business for.
Right.
Well, I think everybody got a good deal. I think Contango shareholders got the best deal, frankly, because we achieved production, and our level of production is going to be about, on average, 66,000 ounces of gold a year. The mine will produce about 220, or 30%, on average about 66.
Wow.
All-in sustaining costs are $750, and that's again guidance from Kinross, $750 per ounce, and so that gives you a good $1,000 margin.
It is an extraordinary project in a lot of ways. Obviously, grade, and not having to build the mill and not having to do much but scoop it out of the ground, kind of a thing. Maybe we should go ahead and share screen, get in that presentation to kind of show people the numbers behind it, as well as where the project's located, the geometry and everything else, because it is a very compelling story, and I appreciate the fact that you told us about it early on. But right now, I think we're in kind of the sweet spot where a lot of the risk has been mitigated, if not eliminated completely.
Yeah, so maybe we'll talk about the two projects, two standout projects we have. The Manh Choh is it's on the Tetlin native land. This is a tribe that owns a very large area of Alaska. It's a bit of a unique situation in Alaska. They own an area about the size of Rhode Island. And we have a mining lease with the tribe, and we've worked closely with them for well over 10 years now. So that's our Manh Choh project. That's the joint venture with Kinross. I'll talk about that, and a little bit later, maybe we'll talk about Lucky Shot and our plans for that new project that we just added this year.
Good.
You mentioned our share capital, so I'll just touch on that. 6.7 million shares outstanding. We have a strategic investor in the state of Alaska, the Alaska Permanent Fund. That's an $83 billion fund. We're their first and only investment in mining. They did quite a bit of due diligence. They like our business plan. They like the fact that we're going to be cash flowing, $50-60 million here in a few years. And we're well financed right now with about $25 million in the bank. So here's the location of Manh Choh. It's in eastern central Alaska, not too far from the Yukon border in Canada. 1.3 million ounces, average grade 4 grams per ton. Now what we're going to do is use an elevated cutoff strategy and deliver 6 grams per ton to the Fort Knox mill. And based on all the infill drilling that we've done this year, that 6 grams is going to hold. So we're really pleased to find that. So here's the deposit itself. It's kind of ideally located for a mine. It's up on top of a hill. That means you don't have a lot of water to manage and worry about. That's usually the biggest headache for a mine, is managing water. Being on top of the hill, we still have to have stormwater drainage and proper to properly accommodate the movement of water, but we just don't have a lot of water. We're also in interior Alaska. It's not a high rainfall area. You have 2 deposits here. In the slight background is the main deposit, and then in the foreground is what we call the north deposit. A little over 1 million ounces will be recovered, probably about 1.1, 1.2 million ounces. over a 5-year mine plan.
Hmm.
We had a $19 million program this year to do infill drilling, geotech, and lots of other work in preparation for completing a feasibility study. Middle of next year is when we're expect that to come out. Of course, we'll be doing ongoing exploration work. We did about $2 million of exploration work this year. And the plan is to have this thing in a full year production in 2024. We'll be ramping up in 2023.
What is
So,
the
short time frame.
exploration upside to that resource? You know, the size of your land position and any identified anomalies.
Yeah, let me run up a few slides. So here's this map covers about 7% of the total area under lease from the Tetlin tribe.
Wow.
It's a very small area. We refer to it as the Chief Danny area. Chief Danny was the chief of the Tetlin tribe when we negotiated the agreement with them. The two black areas on here are the main Manh Choh deposit to the south and the North Manh Choh deposit to the slight north. You can see that this is gold in soils geochemistry underlying it with the multicolored map there. You can see those mineral trends go on for about 4 or 5 kilometers. Wow. on the two deposit types, and these are skarn type deposits, so they're replacement deposits, and they tend to form along structural corridors in favorable limestone host rocks. So the fact that the geochemistry is there, it requires more drilling to define ore deposits, but we certainly got a great start here. Great database that was financed by Royal Gold during their tenure for about 3-4 years. That's how they earned their 40% interest. They spent about $35 million. So we've got a great geochemical database. We've got a great geophysical database. So lots of data to work from to determine where the best targets are. You can see a big anomaly up there at North Saddle. There's a few drill holes up there. They hit some interesting things. Not the 4 to 6 grams that we have at Manh Choh yet, but there's certainly lots more exploration work to be done there. And again, this represents about less than 10% of the total 675,000 acres on the Tetlin tribal lands.
So you have a 5-year mine life currently. Does discovery of new resources, what does that mean? Would you increase throughput? Would you increase mine life? Would there be any other permitting issues involved?
Yeah, all good questions, and short answers. I think it would extend mine life is the main thing. I think at some point there's only so many trucks you can put on the road that before you start upsetting people, frankly. On the permitting question, it really kind of depends on where the deposit's located. Because these two deposits are right up on top of the hill, there's very little impact to wetlands because we're up on top of the hills, we're out of the wetlands. If the deposits are down in the creeks or in the lowlands and they're impacting wetlands, you'll have 404 permit requirements for those deposits. So it kind of depends on where they're located.
So if you're adding to the mine life, though, that's not as much of an issue because you have the time to work on those permits.
Exactly. So you start exploring. We did $2 million this year. Maybe we'll do $2 to $5 million next year. Yeah. You're always going to do exploration here.
Mm-hmm. Okay. Well, good. I didn't mean to get you off track on that, but it was just popped into my head on exploration potential. I did not realize that it was that extensive and that you had, focused on such a small area of the property you hold.
Yeah, that's. I think there'll be lots of exploration upside here over time. We're right connected to the road, so we don't have to use helicopters. So for Alaska, that's really inexpensive exploration. And it's all on private land, so it's easy to build roads to get to where you need to go. And again, you don't need permits for that. Yeah. We just we work in dialogue with the tribe, and of course they will receive a royalty. We've been doing training and hiring and training programs for 10 years there, so we've got a good working relationship with the tribe, with the Tetlin tribe, and also the local community. So That's something I think we've been known for in Alaska as well.
Mhm. Good. Okay.
Well, in terms of exploration upside, the other project I wanted to just talk a little bit about is Lucky Shot. So, in Kinross is the manager of the project, so they do all the heavy lifting. We meet probably once a month, once every other month. Sometimes it's a technical issue that we're meeting about. We just had a meeting a few days ago on metallurgy. So we've got a good working relationship with Kinross, but they run the show. They're the 70% owner and the manager. So while they're doing all the heavy lifting on Manh Choh, we're focused on advancing our 100% owned Lucky Shot project, which we just acquired earlier this year. It's located in south central Alaska, just outside of Anchorage, about an hour drive outside of Anchorage. It's a historically producing mine, high grade quartz veins.
Yeah, I've always been so impressed and amazed, obviously, with the grades of this project. And it's never had the kind of focused, well-funded, comprehensive exploration program it really deserved, and development program at that, for that reason.
Exactly. And these are high quality mines. There were 30 operating mines back in the day, starting up in the 19 teens. And of course, they were all shut down in 1942 with the War Act, when the government decided to shut down all non-essential mining. So if you weren't mining iron ore or copper or tungsten, your mine was mandated to shut down, and redirect the labor force elsewhere. So there were 30 operating mines here. Lucky Shot was the largest. They produced 250,000 ounces, 250,000 ounces at ore grades averaging 1.5 ounces per ton. Now these are narrow veins.
Yeah.
These are 1 to 2 meter wide mining widths. But those are grades to die for. And it is amazing to me, frankly, that nobody has gone in and done what we're about to do. Just go in and continue to explore the vein down dip. These are what we call mesothermal veins. They're deep in the Earth's crust, where the pressure and temperature conditions don't vary a lot, not like in the epithermal environment where you can go from cold to hot and from high pressure to low pressure. You're 5 to 10 kilometers down in the crust here, so things tend to be sort of even out. And once you're in the sweet spot of where the vein is and where the gold drops out, you tend to be in that zone for thousands of meters, tens of thousands of feet, if you will. So we're just going to explore down dip here. Pretty simple plan. There was a little bit of exploration work that was done on the adjacent property that's called Coleman, which I'll show you where that's located in just a second. It's the same vein, it's just a bit across a small fault and further to the west. This was done by a company called Full Metals back in the early 2000s, I think 2004 to 2010 sort of time period. They outlined a high-grade resource there, 200,000 tons of 18 grams per ton for 120,000 ounces of gold. So now that's considered now a historic 43-101 report, because it was 10, 15 years ago. But we know that we know, one, we know it's there, and two, it demonstrates the continuity of the vein down dip. We acquired a pretty substantial land package, and we've been adding to it. We'll eventually want to control the entire district here, but we probably have about 70–80% of it covered right now. The orange areas here are patented mining claims. So this is basically private, fee simple private land. All of the activities that we're planning on doing right now are on those lands. I'm going to skip that slide. The other thing I like about this project is great infrastructure. The county road, the Willowfish Road, goes right up to the project. You can drive your sedan up there. And then in the area, this is kind of referred to as the Valley, Palmer, Wasilla, Willow. There's about 100,000 people that live here. They live out here because they don't want to live in the big city of Anchorage. They tend to be, blue collar workers, mechanics and truck drivers and millwrights. So we'll have a good workforce that will be able to go home every night. So it's kind of a nice setup. You won't need to build a camp, all those things. And
it's underground. It will be underground, right? So
it'll be an underground mine. These are some of the historic drill holes that this presentation's on our website. So can certainly have people go there and spend more time on it. But it's a typical narrow high grade vein. So, you'll get 7 grams per ton in one hit over a meter or two, and then you'll get 1,000 grams per ton in another hit. You need to drill these things out with a lot of drilling to demonstrate the grade continuity, which is exactly what we plan to do. So here you can see the Lucky Shot mine. So that's the big producer. 250,000 ounces came from these workings right here. You can see it's a pretty small area. That's about 1 kilometer in width.
Oh.
The Coleman is over here. That's where Full Metals drilled out that 120,000 ounces of 18 grams. It's across a small fault, but it's the same vein structure. What we're going to do is come down here to the Ensearch level. So Ensearch is an oil and gas company in the early 1980s that decided, like a lot of the oil and gas companies, wanted to be in the mining business.
Mm-hmm.
They came in here with the idea of coming into the footwall and accessing the vein, but they never got there. As an oil company, they kind of came to their sense and early and decided that the mining industry was just a different kettle of fish than oil and gas. So our plan is to come in here, refurbish the adit, get underneath the vein, and just drill the heck out of it. And that's the plan here. Stage 1 is refurbishing the underground. There's about 1,500 feet of existing underground workings. The first half is in really good shape. It's been slashed out to 10 by 12. The second half in red there is a little smaller. It's 8 by 9. So we're going to slash it out and reconstitute the underground.
Okay.
And then we've got about 750 feet to go to get into the footwall. We'll drift parallel to the vein in the footwall, and then just drill the heck out of this thing. Shut up drill stations and fan drill, and that's what's shown here in the cross section below. The existing tunnel, the extension, and then get into the immediate footwall and just drill the heck out of this thing.
And so you have a good understanding of the structure and continuity and where to go then at this point.
Exactly. That's largely because of those 173 holes that Full Metal drilled. We know the vein's there, and they did that with a helicopter supported program from the surface. It's a very steep mountain, as you saw in the photo there. So very tough to do that from surface, and this will be a lot easier. Plus, you put your underground development in. So when it comes time to mine, when you develop the feasibility level plan, you've got everything set up and ready to go. Not a lot of extra work to do. So I think we're just talking about the sort of key takeaways here. We only have 6.7 million shares outstanding. We're going to get uplisted to the NYC American next week. I think that'll be it'll make it a lot easier to buy our shares than on the OTC. I know the market maker there, Brendan Kreinen, we've worked with him at Nova Gold and Trilogy and Alexco. So I think that's going to be a good move. Kinross will continue to aggressively develop the Manh Choh project. They paid $93 million for their 70% interest. So, they're motivated. They're highly motivated to get this thing into production. So I think that's going to go smoothly. Once in production, again, low execution risk because we're not building a mill, not building a tailings facility. Once in production, we're producing on average 66,000 ounces of gold net for Contango shareholders, 750 all-in sustaining cost. We're generating, over $60 million of free cash flow at that point. And again, we only have 6.7 million shares. So, that's over $10 of free cash flow per share. I like that.
And we should note when people go to look at your share price, this ain't the typical junior mining share investment. You're not listed on the venture exchange or even Toronto. You're US listed. You've got, less than a tenth of what the typical junior mining company or development company has shares outstanding. And your share price, is over $20. So people look at that and they may get sticker shock, but we're talking about market cap here and $10 a share free cash flow.
Yeah,
plus
those are
projects.
kind of astounding numbers, but that's the, when we set this thing up, we kept a really tight shell and
Yeah,
kept a really tight share structure. And I think with Lucky Shot, we've got a 2-year plan. We're going to spend about $15 million getting the underground work done. We should get about 500,000 ounces of gold outlined there. And around that, we can develop a mine plan that we can produce another 50 to 75,000 ounces of gold out of on an annual basis. And again, without a lot of other dilution.
right.
So, I think we'll get all that done with about, less than 10 million shares outstanding.
That's amazing. And so we're looking at something that will have just extraordinary leverage because of that really ultra tight share structure. So what I would encourage people to do is to kind of obviously ignore all the typical metrics in the junior mining share industry and look at the ones that are key here. That kind of cash flow per share is just amazing.
I'm like you say, I left Trilogy for a good reason. So
Yeah.
I thought this was a pretty good reason. And obviously, we know Alaska, we know how to get business done in Alaska. There are other opportunities up here that I know about and that I think might be good longer term fits. So, with a tight share structure, we can be an industry consolidator for high quality projects. We've got access to capital. Our strategic relationship with the State of Alaska Permanent Fund is important. And of course, we've had some success in the business, so we've got a lot of folks we can go to and talk to about if we do need money, whether it be equity or debt. We have those relationships. So I'm pretty excited about where we are, and I look forward to updating our shareholders and investors on our progress this year. And the first big thing is getting listed on the NYSE American. Hopefully next week. It's a Thanksgiving weekend, so we'll see if they can. They told us the 23rd we should be listed, so we'll see. Maybe the following week, but
Maybe you'll have a lot to be thankful for then. Rick, thank you so much for bringing us up to date, and I encourage our listeners and viewers to look into it more closely, as I am as we speak. Thanks so much, Rick. Always a pleasure to talk with you and explore your next upcoming success.
Brien, good to see you again, and have a great Thanksgiving weekend.
Great. Thank you.
Bye-bye.